Well, we're back with another video, and every single day I'm asked, what should I buy? What kind of gold should I buy? Everybody knows how I feel about it, but I think that you should make your own educated choices. So that's what we're going to talk about, all the different ways that you can buy gold, and you have to determine what makes the most sense for you. I know what makes the most sense for me, but let's just dive right in. Because quite frankly, the average daily trading volumes, well, guess what? Gold is the second most traded intangible asset because they're trading contracts. That's the spot market. We'll get more into that in just a second. But gold liquidity includes estimates on over-the-counter transactions, so OTC, and published statistics on futures exchanges and gold-backed exchange-traded products. All of these are intangible. My personal preference is tangible, because if you don't hold it, you don't own it, regardless of what your perception is. So that takes us to the spot, because the spot market really only reflects trading demand. That's it. So here is the most current spot market chart that I pulled on 6/27/24. And people might be saying, well, why is gold going down? Why is silver going down? Because it was a little overbought on a technical basis, but still remains severely undervalued. So back in October, it was at 1823.50. Guess what? Hit a new high April 2024, and then again. Right? So it's broken out and it is simply correcting, because what you're looking at here are the moving averages. So what they do, there's your short-term cup, but every day they total up where gold closes for 200 days and then they give it an average. And they do that also for the 50-day moving average. 10% away is a lot. It's still, even with this little bit of a correction that it's had, it's still 12% away. So think of it like a water skier. There's only so far one way or the other that you can go behind that boat that's driving you before you come back to center. But that's just technical. They can create as much gold as they want to. That does not nor ever will exist. So now we've broken below the 50-day moving average. It's not a big deal. I don't personally really even care that much about spot. I only do because you do. But another way, and this is designed to move along with spot, is the ETFs. And a lot of people go, well, I'll just buy GLD and then I'll own gold. No, you don't. You own shares in a trust. So let's look at that, because what GLD actually is, or any gold ETF, or silver ETF for that matter, is a diminishing asset. The red line is spot, the blue line is GLD, the net asset value of GLD. It is designed to mimic the spot market. That's purely what it's designed to do. But you can see where the blue and red line converged over here, and then over time they started to separate. Now there's a pretty wide separation. That's because they sell off holdings on a daily basis to pay their ongoing fees. You do not own or have access to the underlying metals. And it is, as I said, a diminishing asset. But what's particularly interesting that's happening right now in the spot market, typically the ETF flows, money going in, money going out, can determine the spot price. But guess what's happening now? There is a divergence, and we are seeing the spot market continue to go up even with heavy GLD sales. That is a pattern shift. That tells you that there's something more that's happening in this market than just kind of meets the eye. So definitely pattern shifts are key, but why is that happening? Because demand is exceeding that supply and even overwhelming the ETF's ability to control that spot market. I think that's extraordinarily interesting and extraordinarily telling that there is something more that is going on here than meets the eye. But here's something else that goes on that you're not really seeing at all, and these happen to be the notional derivative contracts, the derivative gold contracts in the FDIC insured banks, right? Look at 2023. This is 2023. This is the full year for 2022. But in 2023, they had so much buying and selling of these contracts that it dwarfs anything and is easy to manipulate the prices. People always want to know, well, why is gold going down? Why is silver going down? Because they can create as much gold and silver that does not nor ever will exist as they want to, and it is cheap. It is cheap and a leveraged way to control the price and keep you blind to what's really happening. But make no mistake, look at this. When they put the full year for 2023, that's off this chart. They're going to have to recreate this chart and make other things look dwarfed because of the level of contracts in there. Gold derivative contracts are not physical gold, but the markets read it as if there's all of this gold that exists, and that pushes the price. Another way that you can approach it is through miners. Now, miners, that's really a corporation. And so you don't own the underlying gold either, but you do have some of that, but you have also the expenses and the choices that the miners make. What I'd like to point out in this case is this wedge, like a wedge of cheese. And when you get close to the end, in this case, there is a break above, which means that this index is more than likely to continue to go up because of this technical breakout. But make no mistake, you don't own the physical gold, you own shares in a mining stock. It's not the same thing, not by any stretch of the imagination. But this is the physical only market. This happens to be key dates and rarities, which, these coins can go for 8 million, 15 million bucks. They're slabbed in case like this. They're pre-33 coins. And what do you see here? This graph starts in 1970 and it goes through 4/30 of 24. You see a consistent series of higher and higher lows. How do you know it's a bull market? When you see higher and higher lows. Because as long as you keep getting those, I guarantee you will get higher highs. It's just the way it works. There's 74, that cup breakout. So this is when this whole thing started. There's another cup and breakout. Here's another cup and breakout. And I want you to particularly pay attention to 1989. I'm going to come back to that. But once 1989 and 2000 hit, what do you see? You just see an upward trajectory going into 2008, right? And then you see another large cup formation, and guess what? There's your breakout, baby. That breakout happened in 2022, okay? Not 2024 like we've seen in the spot market. That tells you that the smart money recognized it much earlier. They began to quietly accumulate, and I mean, they've been accumulating right along. Why? Because they know they want sound money in their portfolios, because they're more aware of what's happening in the markets than you or I are typically. So I'm not going to spend $8 million or $15 million on one coin, but it does give you a heads up to what the smartest guys in the room are doing. So let's just recoup this, what is the word I'm looking for? Thank you. Recap this. Number one, this is a physical only market, unlike all those other markets previous to this that I showed you. It is classified as a collectible, so it puts it in a completely different category than bullion. It is a long-term positive trend, as we can see by a series of higher lows and breakouts consistently happening. The price moves independent of the spot market. Doesn't matter what the spot market does. That is irrelevant. This is a physical only market. And breakouts occur first. That's why I pay attention to this. Not because I'm going to spend $8 million on the coin, but it shows me what those guys in the know ahead of time. 2022, we saw that breakout. Cup formation concludes before the more common collectibles and certainly before spot gold. That happens last. This happened in 2022. And of course, it's where the 1%ers play. They're only affordable there. And it is, in my opinion, the absolute strongest classification of gold that you can buy. It's where I want to be. If I had the opportunity to get the same health insurance as the federal government, I would totally do that. That's not an option, but this is an option, and let me show you without spending $8 million on a coin. This is the area that I like to play in, and let me show you why. Number one, this is the PCGS 3000. Again, it goes through 4/20 of 24. Remember I said pay attention to 1989? I'm going to summarize this in a minute, but that's what these coins did in 1989. In 2022, we had the breakout, but it occurred after the 1%ers breakout in the ultra rarities category. It's still below the 2008 highs, so it still has to meet that criteria, but it's got a breakout, so it's going to be doing it. That is most likely to be the next step, right? Because you go up, you hit your head for a second. Those people that bought coins in 2008, hopefully they are not naive enough to liquidate them, but rather hold on for dear life. I know I'm not. But look at how far below it is to the 1989 high. Now let's recap what's going on, because this too is a physical only market. But coins in this category can be had for somewhere around, don't hold me to this, I'm obviously not looking at the price, but somewhere in the vicinity of 2,500, 3,500, 5,000, well below fundamental value and still below the 2008 high. Same classification as a collectible. It is in a long-term positive trend because we see all those higher and higher lows. The price moves independent of the spot market. You see why I don't really care what the spot market is telling me? Because that's just a manipulated market. This market is far more honest. Breakouts occur before spot gold. So the 1%ers make that breakout first, then this category, then the spot category. The cup formation typically concludes again before before the spot market, and it is trading well below the all-time high, whereas the 1%ers are at their all-time high. Again, the safest classification. Why do I call this the safest classification? Simply put, because if they choose to do an overt confiscation, and make no mistake, price manipulation is absolutely confiscation. But should our government choose to do another overt confiscation, another one, they have to pay you market value. Well, they do that because bullion and GLD and all that other stuff is about the spot market, but this is a completely independent market. It's not worth it. This makes up less than 2% of the total gold market, and they are not going to take each coin and value it to pay you fair market. That's saved for bullion. This is why, personally, I only buy the pre-33 gold coins, because I always look at what if I'm right and what if I'm wrong. And when I can do something that doesn't matter whether or not I'm right or wrong, rock and roll hoochie coo. That is what I'm going to do all day long. So let's look at the ultra rarities versus, and 1989 versus the 1%ers and the area that I like to work in, the PCGS 3000 index. Who knows more about what's going on? Look at where 1989 was there. They know what's going on, so they just keep buying the 1%ers, the guys in the know. Whereas this market is severely below the 1989 level. Will it get back there? I can't guarantee it, but Technically, I would say yes. This is a huge cup formation. Lower price collectibles are still well below the fundamental value of an ounce of gold. So as long as I know that, that's why it's so important to identify what that is, because that's where it's likely to go in a reset, right? Where they take this stuff that has no intrinsic value and is used in one place, and they revalue it against this stuff that is used across the entire global market, has the broadest base of functionality and the broadest base of demand. So technically, yes, I do believe that we are going to see us hit that high again and probably go well beyond that. It's being in the right place at the right time when this next crisis becomes obvious, because it's already unfolding. So it's not something I'm waiting for, but it becomes obvious to everybody. So you have to decide what's right for you. We have a sound money strategy that's based on both gold and silver, because this is a currency life cycle issue, and that's what you want. You want sound money when you're going through this. Then you have the ability to convert it into any income producing assets, to convert it into the next system. Now, originally in my strategy, I would have converted a whole lot more, but should that system be CBDCs, and should we not have a seat at the table? That's why coming together in a global community is so critically important, and creating that peaceful revolution simply by converting this stuff into this stuff. That's all it's really going to take. If enough of us do that, if we come together in community, we've got a shot at having a seat at the table. So if you want to show your support to this channel, give us a like, leave us a comment, share, share, share. Because how many times can you be lied to and you do not know the truth? I'm trying to show you the truth. You can follow all the links, formulate your own opinion, but please put your best interest first, not based on hopium, but based on hard facts and history. Because will this time be different? Probably not. It never is. So if you have any questions about this or anything else, send them to questions@LynetteZang.com. And thank you so much for watching and supporting this channel. I know together we can make a positive difference for a lot of people. So until next we meet, please be safe out there. Bye-bye.